Hector, do you want to go ahead and make that full screen
Yep.
presentation mode? Sorry about that.
There you go.
Sorry, everybody. Welcome to another QB Power Hour. Today we're talking about engagement letters, scope of work, and client onboarding. We're very glad to have you all with us today and joining us for this Power Hour. Hector, if you want to go ahead and move on. My name is Michelle Long. I'm a CPA, owner of Long for Success. Whoops, okay, so our webinar series about QB Power Hour, we have these every other Thursday usually, and we cover advanced topics in QuickBooks Desktop and QuickBooks Online. Next week, we're covering in-depth in QuickBooks Enterprise, and then on the 29th, we have managing accounts payable in QuickBooks. We'd love to have you all joining us for that. Go ahead, Hector. In our agenda today, we're going to give you just a little introduction about QB Power Hour, and Hector and I talk about the CPE process, some announcements with some upcoming events, and then the topics and learning objectives for today are we're going to cover some tips and tricks about designing a perfect engagement letter based on your pricing strategy and the accountant-client expectations and defining the scope of work. This is a really important area for a lot of us. And then Max from Practice Ignition is going to be talking about how that app will allow you to help with the client onboarding process. It's really pretty cool, so I'm glad we're sharing that with you today. My name is Michelle Long, and I am the owner of Long for Success in Kansas City area, and I see some of you saying, go Royals. You're right. I am very happy to say that the Royals won last night and look forward to playing Toronto, but because I did go to the game last night, my throat is sore and scratchy today, so I'm going to let Hector do most of the talking today. Hector, you want to go ahead and introduce yourself? Hector, you going to do your slide, or you want me to?
No, I got it.
Okay.
Hi, everybody. So I work and live in Miami, Florida. I'm a partner at Quick Bookkeeping. We do mostly QuickBooks training down here in Miami. And I also do some national training with Intuit as well. Very happy to be here and talk about engagement letters. And let's talk about sponsors and guests. Michelle, you want to take over?
Sure, yeah. So the primary sponsors are Hector and myself with Long for Success and Quick Bookkeeping and Accounting. He and I are the primary sponsors, but then occasionally we bring in other vetted sponsors such as Practice Ignition today. And we focus on things that are useful and relevant for you all as accounting professionals and QuickBooks users. We're not officially sponsored or affiliated with Intuit, although from time to time we have them on as a guest speaker, and love to get information from them and work with them closely as well. Go ahead, Hector.
Okay, so the CPE process.
Okay.
Yeah.
Go ahead.
So the CPE process, you must be logged in for at least 50 minutes. It has to be on the live webinar. It cannot be the recorded version. So everybody's going to get an email with the YouTube link where they can watch this recording. But for the CPE, you have to watch it live, and you have to get the CPE keyword right. If you don't get it right, then the system won't issue the CPE certificate. Expect it to be emailed within 3 weeks, although right now we're 100% online, and everybody should have their CPE certificates. Michelle, want to do upcoming events?
Sure, yeah. Both Hector and I are really looking forward to QuickBooks Connect coming up in a few weeks in San Jose, California. If you all haven't registered yet, I encourage you to check out Southwest Airlines. They have a great sale on their fares right now, and they do fly into San Jose. We've got Oprah Winfrey who's coming to QuickBooks Connect, not to mention other great speakers and breakout sessions, and you can get 50% or $50 off the registration if you use that special code. If you need that, I'll put it in the chat room in just a minute. Then we'd also like to invite you to join Hector and I and other speakers on the QuickBooks Online Cert Prep Training Tour. We're going to be coming to several cities across the U.S. and encourage you guys to join us in these cities. If you can't attend one of those in the cities, or it's not in a city near you, there's also some online webinars that you can take and help you to get certified. If you go to intuitacademy.com, you can check that out, and all that is free. Then Hector and I will both be presenting a live QB Power Hour session at a special time from Las Vegas at the SleaterCon. We'd love to have you join us there. If you can't make it, tune in to the QB Power Hour, and if you are there, make sure you come up and say hi to us because we enjoy meeting you all. Hector, you want to go ahead and take it from here?
Yeah, sure. Thank you, Michelle. All right. So I want to talk about engagement letters, but I want to start telling you a little story about how I first sort of changed my mindset around what an engagement letter was. I went to see a local attorney, and this was like 5 years ago, and I asked him, Hey John, help me figure something out. My bill of my receivables are getting out of control. My clients are asking me to do stuff that we didn't previously agreed upon. People are expecting things to be done faster than what we talked about. You know, it looks and feels that I need a good engagement letter. So he says, okay, sure, let's sit down and let's go through a couple things. So he takes out a questionnaire and he starts asking me about my marketing and my branding and my reputation and my certifications and my capacity and my infrastructure. And I'm stop him and say, wait a second, you know, I just need an engagement letter. Why are you asking me all this? And then John tells me, Hector, I can take out an engagement letter from my library, slap your business name on it, charge you $500 and call it a day. You want that? You know, obviously it made me think. I was like, well, you know, now that you're putting it that way, of course, it doesn't seem that that's what I want. So let's try this exercise. So we went through this concept of actually looking at everything that I do in terms of external factors like my marketing, my branding, how people perceive my company, the reputation, and we wrote all that stuff down. And then we looked at our internal factors like our capabilities, our skills, our capacity, our infrastructure, you know, what technology do we have, my staff, the authority or certifications, you know, am I a CPA, am I this, am I that? And then once we spell all that stuff out, then we had a roadmap to understanding, you know, how are we going to approach an engagement letter? So this is sort of the intro, and I want to kind of get your head thinking about that an engagement letter is not just about wording on a paper, it's not just a contract. There's a lot of sentiments felt during an engagement and client onboarding process. And the language in that engagement letter needs to speak strongly about what your company is, what it delivers, what it stands for, what you will do, what you won't do, and all the other stuff around it. So let's talk about the steps for building your own engagement letter. And I have to make a disclaimer, I'm not an attorney, and this is going to be recorded, so many people are going to watch this. I'm not giving legal advice, and I am not also advocating that your engagement letter should be one way or it should be a different way. I am basically going to show you the experience that I went through and also some of the things that I asked Michelle that she gave me some feedback on, and maybe this will help you draft your own engagement letter from scratch using bits and pieces from other engagement letters that are out there. And then finally, once you have what you think is a really good engagement letter, then you go to your attorney and then you ask him, hey, you know, is this ready? Is this good? What do you suggest?
Hector, we can't hear you anymore.
How about now?
Yes, that's better.
Yeah. Okay.
Thank you.
Okay. So first of all, determining your pricing philosophy is one of the most important things. A lot of people don't think that whether you are value pricing or fixed pricing or a blended of the two or hourly, it doesn't matter, and that's not true. Pricing evokes all sorts of feelings for your customers. It evokes all sorts of perceptions about value, about how you do, how you work, how you are respected in the industry, how you value yourself in terms of presenting your services. So your pricing philosophy is in my opinion, is the single most important piece. And we're going to spend pricing philosophy and the different philosophies or methods that are out there. Then we're going to talk about the scope of work and specifically talking about what's included and what needs to be excluded and what type of language we should be using or examples of language that we should be using in terms of that. And then lastly, all the other conditions, right? So things like disclaimers that the financial statements are not audits, requirements, you know, what are the basic requirements that you need in order to perform the work, what documentation you need from your clients. A lot of times we don't include, or I don't anymore, but I remember a couple of years ago, we don't include a long list of documentation that we need from our clients because it's sort of implied in the conversation that, yes, of course I need bank statements, of course I need check images, of course I need deposit images. But what happens is if we don't put it in there in writing, then the clients can always take advantage of the fact that we didn't complete or we completed it wrong because we don't have anything to go back to. So ultimately, I think that your engagement letter not only protects you as an accountant doing the service with your client, it also sets the pace about how the relationship will be from that point forward. Okay, so let's start with talking about pricing philosophy. So there's 4 pricing philosophies that I know of, which is going to be hourly pricing or hourly fee, value billing, fixed pricing, and value pricing. And I'm going to kind of break them all down so we can kind of figure out where you stand in there. Before I do that, let me do a quick polling question. I would love to know how people currently think about engagement letter process. So I'm putting a polling question about setting up a service with a new customer, right? So onboarding a new customer, how do you normally onboard them? You know, what type of document do you use? You know, is it verbal agreement? And be honest. And think about most of your new clients. I know some clients are so small that we really don't feel that we need an engagement letter, and some projects are so small, but I really like to get an idea. So right now we have about half of the people actually use engagement letters, and about 28% use verbal agreements, and there's a couple of people is somewhere in the middle. Okay, now we have about 75% of the votes. Let me go ahead and close the poll and share the results. So this is interesting. Only about 60%, 65% of you have something that's signed. So we have another 35% that we either do a verbal agreement or an unsigned notification like an email or a statement of what you will do. That's interesting, right? Like you would think people would have a bigger percentage towards having something in writing. So let me talk about hourly fees. And this is interesting. Again, I'm not making a case for hourly fees, and I'm not making a case for value pricing. I'm just explaining what I've done in terms of research. Okay. So single rate is when we take one rate, let's say it's $100, whatever it is, and doesn't matter who in the staff does what type of work, that's the rate that gets billed. Then we have the multiple rate strategy, where we actually define different skill sets or different services or specific employees or staff within the firm, and we define different rates, and then we actually notify the client when we do our timesheets that, you know, X amount of hours was by, you know, a junior bookkeeper and X amount of hours was by a senior accountant or something like that. And then they have this crazy thing called the blended rate, and the blended rate is kind of interesting. What people normally do is they take, so the client doesn't get this multi-layer pricing. They take the pricing of the lowest end individual, and let's say, for example, is our junior bookkeeper, and let's say that's $40 an hour. Then they get the rate of the next level person, let's say it's a senior bookkeeper that does adjustments and reconciliation and stuff like that. And then they take the rate of the most senior level, let's say the accountant, the one that actually makes the accounting adjustments and actually makes the tax entries and stuff like that. And then they multiply all those rates times the percentage of time they typically take on a project, and they come up with something called the blended rate. Now, again, some people use this. I'm not advocating for it or against it. I'm just talking about how different people use different rate strategies. Now, value billing, fixed pricing, and value pricing are 3 that are often confused, and I think it's important to define all 3 because they are different. So value billing means that there's sort of an implicit relationship with the client and a high level of trust. And the client kind of trusts that at the end of the engagement or at the end of the project, you're going to give them a price that is fair. Right? And the issue with value billing is there's tons of subjectiveness. There's always somebody saying, you know what, just charge them 800, just charge them 1,000. And however that person is feeling at the moment and whatever their perception is of what the client is willing to pay because of the value we provided, that's how the prices are set. Typically with value billing, there's not much upfront pricing and there's not much fixed pricing. Okay, now fixed pricing is a little bit different. Fixed pricing is when you take sort of a menu style price sheet where you say package A, package B, package C, and then you create this sort of specific areas where it says, look, if you're client A, that means you have between 2 and 3 bank accounts, and you have between 3 and 400 bank transactions a month, and therefore we're going to give you this price. So fixed price means trying to fit every client into a box. That way, when they shop for services, it's kind of like a menu, right? So they're picking off menu. And then value pricing, it's probably the most complex one of them all. This value pricing is not the same thing as fixed pricing. Value pricing means that we stop and have a long, deep conversation with our client about what their needs are, how they value our services, how we can possibly take care of everything that they need, and then set the price up front. And typically, job completion and satisfaction is guaranteed. So it's very difficult to value price something and get paid partially, right? Because value price is typically implicit that you're going to complete the work and then the satisfaction is 100% guaranteed. So that's kind of the breakdown of the three. Now, in terms of comparison, I think it's interesting to group them in this way. Fixed price and value billing, how they're different is, fixed pricing typically works with a good, better, best package. And the problem with fixed pricing is you're going to have some engagements are going to be unprofitable and some engagements will be profitable. So fixed pricing, what typically does is it works off the numbers and statistics, right? With some you make, with some you lose, right? With some of them, we give them a fixed price, but we didn't know exactly what was going to happen, and then we ended up spending more time, and then we lose money on it. Or with fixed pricing, the client ended up being really easy, and then over time it's becoming even easier, and then we're making money on it. Now, the problem with fixed pricing is it requires a consistent periodic revision, and then it's very difficult to make changes of pricing over time because the client already has this expectation of fixed pricing. Now, value billing, it's a little bit different. Value billing, it's again, there's a relationship that's implicit. Clients are typically okay with pricing increasing time to time as long as it's within sort of inflation rate. But if you're going to make a change between doing a quarter at $600 and then doing another quarter for like $1,000, clients typically get a huge shock because it's very subjective. We came up with that number at the end of the project. So that's kind of, I would say, that's also sort of the disadvantages of doing that. Now, hourly fees and value pricing, these are the two that get pinned against very often. And typically, when we're in an hourly fee engagement, we deal with an engagement letter, right? That's the typical term used for a hourly fee engagement. But when we do value pricing, we typically call it fixed price agreement because the word engagement, it's implicit that there's a time running, that there's a deposit or a retainer. So the thing about hourly fees is that most accountants or service professionals like it because it protects the service professional from the downside. So by a client agreeing to pay you by the hour, you're protected of not waste of time with everything that you do in terms of time, you can get paid for. That's why accountants like hourly fees. And quite frankly, there's many projects I still do hourly. I just can't find a way of value pricing them. So there's predictability on profitability, right? Profitability on hourly fees are very predictable, especially when you do multiple rates, when you do the low-end rate and the high-end rate, because you could tie their time logs with the billing very tightly. Now, value pricing, it's gaining traction. A lot of clients are not used to this. Like they get very confused when we say, no, don't worry about it. We're going to give you a fixed price or something like that. And that's the other key thing. When you say value pricing, don't tell your client we're going to value price it because it's confusing. Just tell the client it's going to be a fixed price. The word fixed price needs to be the terminology you use. Don't use value price. That's just confusing. Anyway, now with value pricing, the billing process is predictable, right? Because we already predetermined exactly how much we're going to do it. And for the client's perspective, it's really great because they know how much they're going to pay exactly. Now, the major challenge with value pricing I've had is being able to find out my profitability without timesheets and with clients that take advantage of this, we'll do everything for you type of service. It's very unpredictable to know if we're going to be running out of time. So time management project management. It's a much more important piece than timesheet management when it comes to value pricing. Anyway, so how this comes together in terms of an engagement letter is to understand what the what the accountant's perception is and what the client's perception is. Therefore, when you word something in an engagement letter, when you use a language, you have to make sure that you're both protecting yourself as an accountant and also not shooing the client away. So what are the reasons why value pricing is still a preferred choice probably by the majority of people? It's because we let's start with accountants like value pricing, because as we get better and faster and more skilled, we don't lose our capacity to charge more. As a matter of fact, with hourly fees, as we get faster, we actually make less money. So that's a big issue. The other reason why people like value pricing is no burdening on timesheets. One of the principal, more timesheets, no more profitability management for projects. And also, you can justify a higher overall billing rate, and we're talking about from a faraway view, because the client is typically willing to pay a premium for a guaranteed outcome. Now, why people still like hourly fees, and like I said, I have many projects that do hourly fee, is because sometimes I'm just afraid of changing a traditional system, and I know hourly fee just fits better with that particular client. Sometimes I like to calculate job by job profitability. As an accountant, I'm sort of mired in that concept. So sometimes I want to know if I made true money on that, and sometimes I need to do it to justify that an employee is not working to par, or maybe use it as a tool to push that employee into working faster. And I've also, sometimes I prefer hourly fees because I'm afraid of being burnt by poorly priced engagement. This is what we call downside protection. Hourly fees protects the accountant on the downside of getting lost on a poorly priced project, and value pricing protects the customer into paying a maximum amount. So it's an interesting piece to understand that both of these are sort of in conflict with each other. Now, why do clients prefer value pricing? Because there's a perception that the accounting professional is aligned to their needs and is not just trying to run a clock. As I mentioned, upside protection and guaranteed outcome. Now, why do some clients prefer hourly fees? And trust me, I have many clients that prefer hourly fees, because a lot of clients have the hope, cross their fingers, that the time that it will take you to do it hourly is going to be under that premiumly priced fixed engagement, and that hope that it will take less time gives them the perception that there's going to be a lower overall cost. Okay, all right. So arguments for hourly fees. This will be the last one on pricing. Is both accounting professional and client have one thing in common, that the perception of time is typically an equitable resource. So the constraint and resource of time is something that both people understand very clearly. This is why it's so easy to say an hourly fee, and it is so easy for the clients to immediately ask for an hourly fee. But where's the argument for value pricing is that we don't really want to spend time and then charge. We want to provide solutions, and we want to maximize what we can get from our client, while we want the client to maximize what they feel they can get from us. So those are sort of the two lasting points on that. So this is the CPE keyword, and I'll leave the CPE keyword for about a minute. Michelle, are there any questions that you want me to answer? I think there's a couple of questions there.
Yeah, there's been a couple of questions, but I've been doing a good job of trying to keep up with them. Some of the comments that people made were the fact that different clients have different, expectations or whatever, and what's right for one may not be right for another. And Hector and I both, we just want to give you guys some information. It's up to you to decide what's right for you, for your practice, and what's right for your clients. But the one thing that I would say is we've got to get away from basing things on the time or the cost that it takes us to do stuff. Because of downloaded transactions, bank fees, bank rules, and all this stuff, we're able to do things a lot more efficiently and effectively than ever before. We should make less money on that, and that's where pricing based on the value comes into play. Just because we can do it faster and more efficiently, the value is still there. So getting away from the cost-based or the hourly, I think, is very important. But Hector, let's say that keyword again, Australia. Australia, I'm thrilled to have been in Australia teaching accountants about QuickBooks down there. That was a great time. So write down Australia. Don't type it in. You need to write it down and answer that poll question a little bit later. Australia, down under. Hector, you want to go ahead?
Sure, sure. So some people are asking, what do I do with the CPE keyword? Later on, towards the end of the webinar, after we do the presentation by Practice Ignition, we're going to have a polling question, and you have to enter that question, that keyword correctly. There's one of the questions here. I don't know if you answered it. It's a really long question about timesheets, and I need to recognize something. It's very important. Timesheets are used for typically three purposes. They're either used for processing payroll. That could be one of the purposes. A timesheet could be used for internal job costing, and a timesheet could be used for hourly billing or for reimbursable style billing. So it does depend on what you're trying to achieve. When we say value pricing, don't use a timesheet, we're not saying don't stop paying your employees by the hour, and we're also not saying that you can't use a timesheet to process your paychecks. What we're saying is don't use the timesheet as a method for invoicing your client, right? So that's just a concept. And again, I'm not advocating for value pricing. I think that value pricing has its place on certain projects, and value pricing has a place on different projects. Let me launch a polling question, and I like to talk about, now I want to shift from pricing to payments. So I really want to talk about the payment process. So what do typically people use for payment process? Do they get paid 100% up front? Do they take a retainer and a deposit and then just at the end charge the balance? Or do you take a deposit and then charge a payment somewhere in the middle, and then a balance on completion, or just a retainer and straight hourly, and obviously the miscellaneous ones? So the idea is that we kind of get an idea from the crowd. We have over 700 attendees today, so this is a pretty strong sample, right? So as you see this here, we get a pretty strong sample. And Michelle Long, like if you Google Intuit rate survey, Michelle Long has a much bigger sample done on pricing, and some of these questions are answered. Michelle, were you going to say something about that?
Yeah. We've got the Intuit average billing rate survey. Some of the initial results are out, but we've got some more that are going to be coming shortly. So if you subscribe to my blog at longforsuccess.com/blog, you can catch that, or the Intuit Accountant blog. And when it comes to deposits and retainers and things like that, one of the things that I will tell people, especially if it's a larger project, if they're not willing to pay you now, what makes you think they're going to pay you later? I think it's a best practice to get some kind of deposit or retainer up front, because you don't want to do lots of work and then have them say, oh my gosh, it's $1,000, I thought it was going to be a couple hundred, or oh my gosh, this was $5,000, I can't pay you that much. You always need to get some kind of deposit or retainer up front. Maybe not 100%, but at least a portion of it, because if they're not going to pay you now, what makes you think they will pay you later? Right. So there's the results, Hector. You want to go ahead and talk about those?
Yeah, so only 2% of the people are being paid 100% up front. And this is one of the interesting things, is a lot of the things that I do, I require 100% upfront payment, period. Okay, sometimes there are situations where the clients need to value your work more than they value their money. Like, you have to put a much bigger value perception on that. This concept that people are so afraid of charging up front, I have an issue with, especially with my accounting. I have so much money in accounts receivable. There are certain situations where we charge 100% up front. Let me tell you a situation when I charge 100% up front. If I don't know the client and it's a brand new client, charge 100% up front. If the client is feeling a little bit shaky, like it's not going to be a typical client that I don't want to deal with, but it's already feeling a little bit weird, just don't say no, but raise the price, charge up front, and then see how serious they are. So there are certain values of charging 100% up front. The other technique for charging 100% up front is when people start barking about pricing, just say, look, I can give you whatever, $100 off if you pay up front. Right, so you can actually use that as a bait and also really help your cash flow. Yeah, sorry about the spelling. I think I missed a space there somewhere. Okay, so that's the kind of general sense that I have about this payment process. Now let me switch over to some of the external factors that I talked about that changes how we onboard a client and ultimately the type of language that we use in an engagement letter. So the marketing and branding that you set sets a lot of expectation about quality and price. The client's perception of value, it's going to it's going to change heavily how you set your price. And in an engagement letter, when you have a price that you feel is you're sort of afraid of it, you're sending the engagement letter, but it looks like a high price, especially if it's a value price or a fixed price. You think about all the marketing and all the branding that you bring to the point where you're in that table setting the price. And you could always go down from a price, but it's harder to go up, right? So if you want to negotiate with the client afterwards, and we can have a whole nother session about discounts, but let's not talk about discounts. If you want to negotiate some trade-offs, then you start with the highest price that includes everything. So that would be my first tip. The second thing is how you present your services. So how you spell out what your scope of work is, what you will do, how you will do it, and when you will not do it. Sets an expectation about your skills, capabilities, and outcome, right? And that's going to be tied to the price. Listen, a lot of people, a lot of professionals, and even myself, we run into the issue where the client wants something by a week from now, or they want it 2 weeks from now, versus the client that wants it a month from now. There has to be a relationship between the expectations of time frame and capacity, because if a client comes to you on April 10th and they want this very, very big project to be done by April 15th at a time that you're super, super ultra busy, there has to be a huge price premium on it, and in your engagement letter spell out that we're guaranteeing it by this date, and make sure that your price includes that. So that's another important piece is about setting up a price and the language in an engagement letter. The other piece is client involvement and requirement. You need to set an expectation of trade-off. There are clients that do not want to be involved at all, and they want to be hands-off, and they want you to do everything, and everything means you have to make phone calls, and you have to call the bank, and you have to log into their own bank account and look for a deposit or a check image, or you have to go through paperwork or go through spreadsheets or hunt through their filing cabinets. The client involvement, and when they're required for you, it's a trade-off that needs to be exchanged with price. If the client is going to be heavily involved in giving you the information is organized, then your price could be set accordingly. So this is why it makes such a big deal about, price sets everything. Now the disclaimers are important, right? So you need to start thinking about unknown and potential risks. Like, hey, what if I log into your computer remotely and then somebody and there's a dirty website up? I'm just going to log out and get rid of the engagement. This has happened to me, right? When I'm working with a client and log in remotely and they're looking at someone to see, stuff like that. So you may want to disclaim that if you're going to work remotely, we need a computer that is separate from their personal use and for business that is used 100%, and it's pretty much set up just for us. Also, you need to avoid implicit assurances. A lot of times people just assume that the work you're going to do, it's going to be sustainable by a bank, and a bank's going to be able to process a loan, or it's going to detect fraud or detect bank error or something like that, and then somehow 3 months later they say, well, you'll be doing the bookkeeping and you should have caught this earlier. So you want to make sure that you want to with language explain what are the things that we are not doing, that are the potential risks and we just can't control. So make sure you avoid implicit assurances. Clients always have this really high expectation of that everything you will do will be perfect and it will be useful for everything. And then lastly, clear pricing, definite payment terms, set the expectation of priority, right? If you have your clear payment terms and clear pricing, clients tend to respect your work a lot more. Now, so putting all these things into consideration, it's important that we understand the concept, right? Send your services in an engagement letter, and your engagement letter corroborates with everything you do, how you market yourself, your reputation, how you explained it, how you presented your services, what you're willing to do, what you're not willing to do, what is included, what is excluded, and how you're going to get paid, and all these things give the client a perception of value. If that value is above the price, then the client thinks, or feels is a good deal, and you're going to close it faster. If you don't have enough perceptions of value and that's lower than the price, that's when the client feels it's a ripoff, right? I know this feels like a little bit redundant, but it's an important piece to kind of keep in mind. The psychology of pricing is extremely important. Now, we have a couple of more slides that I'm going to skip because we're going to give some time to practice ignition, but what I'm going to do is let me skip out of here and show you a couple of engagement letters because this is about engagement letters, and logically, I think I should talk about the specific engagement letters. So meanwhile, I open an engagement letter. Michelle, is there an outstanding question for me before I talk about specifically engagement letter that I use?
There's been lots of questions, and I'm trying to put them in there. And one comment I would just make to everybody is we are not selling our time. I am running out of time to get my own taxes done today. If I call Hector and say, Hector, can I buy 2 hours from you so that I have an extra 2 hours today? I get 26 hours today instead of 24. That's not how it works. We're not selling our time. We're selling our years of knowledge, our years of experience, our education, our training. All of that is very valuable. Think about it. Remember when you did your first bank rec, how long that took you? How long does that take you now? No time. Remember when you first tried to fix undeposited funds and you were challenged and it took a long time to figure it out and fix it? Now you can fix it in no time. That's very valuable. That's not your time. That's your knowledge, experience, and expertise. We are not selling our time, so we really need to move away from that. So a lot of people are hung up on that, and I think, Hector, perhaps in the future we can have another one specifically on value pricing and time and things like that.
Sure,
but
sure.
These engagement letters are also very important. So Hector,
right.
Why don't you go ahead?
Sure. So on one of our slides
hear you, Hector.
here.
You're muted.
How about now?
I still can't hear you, Hector.
Okay, let me check what happened.
Nope, can't hear you. Okay, while Hector tries to fix his technical stuff, here's a lot of resources for you all to get some more information on engagement letters as well as fixed price resources. Now keep in mind, Hector and I are not attorneys. We're not providing legal advice. We just want to give you some things to start looking at and thinking about. It may be prudent for you to check with an attorney or check with your errors and omissions provider. They may have sample templates that they require you to use. So we're just giving you some ideas to get you looking at things. We're not providing legal advice. Always check with your own attorney. Check with your errors and omissions people. Also, like if you're a CPA, the AICPA, the AIPB for bookkeepers, or the Institute of Professional Bookkeepers in Canada. A lot of those places will have some sample templates that you can kind of look at to help you. Hector, do you want to go ahead and pass it on? I can't hear you at all.
Okay.
Should we pass it over to Max?
Okay. No. Everybody can hear me. I think it's just you.
Oh, it's just me?
Yes, it's just you. Everybody can hear me. Anyway.
My volume was down. I'm sorry.
Okay.
I'm going on mute again. Carry on.
Anyway, okay. So one of the slides that I have here, I have several resources, and I basically took my time to look at all these resources. And then let me show you those resources real quick. And I actually used all those resources plus some of the advice my lawyer gave me, et cetera, to build my own engagement letter. So one of the things I looked at, I think it was important to look at something called SSARS 21, SARS 21. That's a CPA accounting standard that is going to talk about compilations, reviews, and audits, mostly compilations and reviews, and they talk about the specific language that CPAs need to use. So obviously I need to disclaim that for engagement letters that are done by a CPA, we have to use some official language. The other one here is Travelers Insurance has a really cool engagement letter matrix. It's there in the link, and it basically explains to you step by step what you should do, and what are the things that need to be done before putting together the engagement letter. And they actually have links to sample engagement letters for things like tax, bookkeeping, compilation. For example, if I click on bookkeeping, it's going to take me to the sample engagement letter, and they use this narrative mode when they say their engagement letter is actually more of a story of saying this is what we're going to do, this is when we're going to start, and then at the very end they talk about the pricing. So I strongly encourage you to look at that one. One of the other links here talks about specifically tax practice and engagement letters. So one of the things that I've noticed with clients is their perception of value of your services sometimes is tied to how much taxes they pay. So one of the big issues that I have is, especially with clients that I haven't fully trained yet, is at the end of the year, it's a can of worms. I don't know what they're going to pay in taxes or how much they're going to get back. I don't want them to have a connection between my fees and the tax return. Their tax return is supposed to be a fair representation. By having a strong engagement letter that talks about, that they're responsible for making prepayments, they're responsible for withholding taxes and all these things, you can untie the performance of your service or the perception of that with the actual tax return amount. And then lastly, we have the simple fixed price agreement from Ron Baker. This is actually pretty cool. It's in one of the links if you clicked on that. Ron Baker uses a very simple approach where they basically put 5 bullet points of everything that they will do. And then there's a really cool statement here that says, because our fixed price agreement provides ongoing access to accounting tax services in a fixed price basis, you are not inhibited from seeking timely advice by the fear of the meter running endlessly. And that is a very strong statement of value. This is telling the client that, yes, you're going to pay a super premium because we're going to value price this thing or fixed price this thing, but we are not discouraging you from seeking us through the year to talk about taxes, because that advice is going to be very useful for that. And we have here Accountant's World, and that's all part of the links in there. There's an audit and review, compilation, and engagement letter for almost every type of engagement. But lastly, I will show you mine, and if you email me, I'll send you mine. This is something that I built over the years. I kind of have a combination between the legal terms and the what I call the what, who, when strategy, where I actually define here who all the parties are, what's an agreement, what's a document, what's a service, what's an accountant, what's a staff accountant, because I actually used, when I do hourly pricing, I do split pricing. I split my low level and my high level fees. I do a brief description of the service, and it's kind of a proposal, because I actually do a proposal and an agreement at the same time. Then I talk about an assessment of the client needs. So I actually do a summary of everything the client said that they wanted. And then after I do the assessment, I actually explain what is it that I'm actually going to do. And then I do the scope of work, the service. So I actually make it a point to write down what the client wanted, but also write down what I'm going to do. That way the client can never say, well, I told you I wanted this, and it was implied that you were going to do it. And the answer is no. I wrote down what you wanted, and then I also wrote down what I'm going to do and what I'm not going to do. And then I spelled out how I'm going to charge, and I split if it's a service or an accountant type of work. Then I talk about payment terms, maximum, project cost. I talk about that there's no maximum in the case of an open engagement. And then we talk about the agreement termination, who can end the engagement at whatever time, and what the maximum risk of the client is if they're not in satisfaction with the service. And then we talk about potential additional notes. We talk about what they say they wanted in the future. So I write that in there, saying the client may want that, and that's going to be priced differently, and obviously the signatures afterwards. So that's my engagement letter. That I'm not going to say it's been reviewed by a lawyer or anything like that, because that can get me in trouble. But if you want it, just email me. But these resources are big. So let me pass it to Max. Max, are you on? Let me make you presenter. Let me, Max.
Already.
Okay, so Max, just kind of start talking to us about the sales process, because I think that the sales process was an important piece to you, and I'm going to go ahead and make you presenter. You want to talk about, introduce yourself and talk about the sales process real quick?
I would, but I think we're going to run out of time for the demo and Q&A if we get into sales process.
We can go long. We can go long. It's fine.
Okay, cool. So, hi everybody. First off, thanks for stopping by to listen. My name is Max Walsh. I work for Practice Ignition, and we help accountants, bookkeepers, pro advisors, anyone in the accounting space really manage their engagement letters, manage their client onboarding, collect client payment, all that good stuff. Now I am going to go back to my slides. I thought I wasn't going to have time for them, but let me get those started for you all here. So this is a little bit of an introduction and why maybe you should listen to me a little bit about sales processes. I think Hector had a really good slide with a lot of basics on sales processes for accountants. If you get a chance, definitely download those slides and check them out. That was some really great content. But I just had a couple of things to add to that, and a couple parallels between software sales and accounting sales that might not be immediately super obvious. So what do? I'm a territory manager for Practice Ignition. I look after account management and sales here in the U.S. And you know why I feel like I'm qualified to talk to you guys about sales in your accounting firm is that software sales, accounting sales really are the same thing. They're both about relationship selling. If you bring a client onto your firm, you spend all this time onboarding them, getting them set up, but the services you told them that were going to be a good fit aren't a good fit, and they end up leaving your practice 3 months later for a new firm. You don't make any money on them. In fact, you probably lose money on that client. Same thing for us. We want long-term mutually beneficial relationships with our clients, and that really makes the sales process between software and accounting very similar. So definitely, again, go back and read through Hector's sales process slides. They're really great. Hector, did you want to talk about them quickly, or should I just keep going with this?
In a nutshell, one thing is if you value what you do, who you are, what you represent, and you have a very strong proposal system. So we're talking about a well-written, well-defined scope of work, well thought of pricing, then the sales process should be pretty simple. It should be, explain to your client, present the documentation, and the most important piece, which is the reason why you're going to talk about Practice Ignition as a software, is to track it, because that's really when it goes. When you're dealing with 2 open proposals, it's easy, but when you have 6 proposals, 7 proposals out there, we need a place to manage these proposals. So that's the only thing I'll add. And if you could jump to the product demo and skip the slides for a little bit, that would be okay, because if we run long, we can talk about those, because your product is really what's worth looking at.
Awesome. So I'm going to hop in, as Hector said, hop in the product now. A little bit of background on Practice Ignition, 2 seconds, quick background before we dive in.
Swap the screen, because we're looking at one of your screens. Can you swap the screen? Or put Practice Ignition on the other screen, because we're looking at your Slack. Okay, there you go.
Sorry, I lost my train of thought there. Practice Ignition, background on this, basically was created by an accountant, not a CPA, a chartered accountant, which is the equivalent of a CPA in Australia. Fully digital practice, and their big issue was onboarding clients, doing that initial engagement letter or payment collection, all those steps, and that's where Practice Ignition was created out of. So what we want to do is we want to replace that process that a lot of you are probably using right now, creating your engagement letter in Microsoft Word, emailing it to the client, they have to print it out, sign it, scan it, send it back to you. Maybe you're using a digital signature tool, maybe not. But we really want to replace that and give you a much faster, easier, streamlined way to do that. That's going to help you price consistently. It's going to automate invoices for you into QuickBooks Online, and it's going to help you with your payment collection and all the things that come after that initial client onboarding. So what I'm going to do is hop in here and basically create a new engagement letter. This is what I would do, if I was in a meeting with a client, had we arrived on something that was agreeable, or maybe after the meeting I'm going to send them a proposal and an engagement letter. So I add my client, and then I just start adding services to the engagement. So in setting up Practice Ignition, you template out all these services, and this is really useful for building your engagements quickly, because it's going to automatically fill in, the description of what you're doing, a billing type, and a price. And this also comes back to what Hector was saying about being consistent with your clients, being measurable, making sure you're including everything in there. Because it's really easy to forget that line that says we're only going to reconcile 3 accounts, or accidentally say we're going to reconcile 5 accounts for you, but do the pricing for 3. So this is going to help you stay consistent on that. And then based on this billing type and price, we can also automate invoices into QuickBooks Online for you for your fixed price ones, because then we know the price on it, and automate payment collection. I'll get to that payment collection in a minute as well. So we're just going to go through, build our engagement, add as many services as we need. We can mix and match bill types. If you bill on an hourly basis, we can do hourly in here as well. So maybe we'll do an income tax return, and we'll charge them on an hourly rate of $100 an hour for that. So
Max, quick question. I'm, as you know, I'm also implementing Practice Ignition in my practice, and I'm still sort of learning some of the ins and outs. So this question is for me too. Once you start adding all these different services, like you have the basic accounting package and this training, like as you're showing it, how does that interact with different engagement letter templates? Because as I mentioned earlier, the wording of the engagement will change based on the type of service. So are you going to cover that?
Yeah, absolutely.
Okay.
So there's a couple ways that gets managed, but once we've chosen our our services, the next thing we're going to do is actually go in and choose our engagement letter template. So you can set up any number of different templates that you want in here. So if you have a different one for tax versus your regular bookkeeping services, or any of those different ones Hector described earlier, you can upload them in here. Now what Practice Ignition is also going to do is dynamically insert the service descriptions into your engagement letter. So the scope of work gets automatically filled for whatever services you've added. And I'll show that to you when I end up showing you the finished product. Also, the third way you can do this is you can have services insert extra text into the body of your engagement. So if you, let's say you insert like a tax prep, that can also, a tax prep service, that can also automatically create an addendum in your engagement letter talking about, extra legal text for that service. So there are a whole bunch of different ways to get that to match what you need. So I'm going to choose my engagement letter template, and then next I'm going to choose payment. So we're also a payment gateway. This actually just came out. It came out full release yesterday, so very excited to kind of be announcing the release of this on the QB Power Hour. But basically, this lets you do payment collection as part of your engagement letter, and I'll get to that more in a second. But I can enable payment on a proposal, and then also require it. If I require it, my client can't sign their letter without putting down their payment details. So with what Hector was talking about, having a lot of receivables, having a lot of people owing money, we can eliminate that in the practice. So we'll save our proposal. And then we'll send it off to our client. Client's going to get an email with a link to a nice branded accept page. It'll have your logo, it'll have your company colors, it'll look like you, and it'll have a summary for them. All right, this is what we're doing, this is how much it costs, this is the schedule you're going to pay me on. They can enter their payment details, and the way the payments work for us, it's super, super simple. Basically, because we have all this information about what's going to be charged to the client and when, the payments are fully automated. They enter their details, and it just goes. So in this case, it would collect $34.95 up front immediately from their account when they enter it, and then for the next 7 months, it would charge them $3.99. You don't have to do anything. Your client doesn't have to do anything. And if it's creating invoices for you in QBO, it'll actually automatically reconcile those invoices when the money hits your account. And then for that hourly item, when you know what you're going to charge, when you're done with the work, you just enter the final amount, and it'll push the payment as well. So super easy, guarantees that you're going to get paid by your clients. And then down here we have the actual engagement letter. So it's gone in and it's auto-filled all the details about the client, commencement date, all that good stuff. It's inserted the descriptions of what we're doing for the clients. That kind of comes back to your question, Hector, about how it gets modified based on the services. So that's all automatically put in there.
Okay, so let me ask you a question about that. So let's say I have my own engagement letter, which I showed earlier. So I would insert the template without the scope of work or with the scope of work. So what's this package is this a summary of the work, or is this the actual scope of work?
It's the actual scope of work. So what you do when you set up your engagement letter templates in here is you use placeholders to fill in the name. So in this template, it doesn't actually say Bob Chapman. It says, client name inside of 2 brackets. And there's another one of those basically for your service descriptions. And what that'll do, instead of having a scope of work section, you might have an introduction like we have here in the purpose, scope, and output of engagement. You're just putting that placeholder, and it's pulling in all the descriptions from all the services you've added and inserting them into the body of your engagement letter.
Okay, and the client can sign digitally, right? You don't have to have a paper signature for this.
Absolutely, they just type in their name.
Yeah, that's awesome. That's the one thing that sold me. It's like, dealing with the paperwork is such a pain sometimes, but having it all digitally like that, I think that's one of the strongest things.
Thank you. Yeah, it makes it super easy for both you and your client. Also, that page is mobile optimized. So the folks that use Practice Ignition really well, and this kind of comes back to the closing the sale thing, they'll actually sit there in their meeting with their client at the end of the meeting, instead of saying, oh, I'll send you an engagement letter in a couple of days. They hop in Practice Ignition, whip it up in a couple of minutes, and the client can sign from their phone right there in the meeting.
And I did notice, Max, that when I first logged in, there was a whole bunch of templates for engagement letters. So you do have some engagement letters in there that you recommend, but people can just copy and paste theirs into it, right?
Yeah, so there are a few in there just to show you how the formatting works. Personally, and kind of as a company, we suggest exactly what you and Michelle said. Speak to a lawyer, speak to your insurance company, find an engagement letter that matches, the way that you want to talk to your clients, and that covers you for any regulations that there might be in your state, county, whatever is different about where you're operating. So yes, there are samples in here, but definitely I would suggest that you seek out one that really matches your firm.
Okay. Do you want to show one last thing before I put the CPE keyword? Maybe something will take a minute.
Yeah, no problem. So the one thing that I just wanted to show everyone is this tracking element of it. This kind of comes back to what you said, Hector, about, I have 6 proposals out the door. Where are all of them? If you're doing this over email, if you're sending everything out that way, it's very difficult to know where all your proposals are. Then this is going to pipeline everything out for you, show you where they are, what they're worth, and track them through that process until they get signed and the client's paying you.
Okay, cool. Now we're gonna run a little bit long. So if the people want to stay for a couple more minutes, we're gonna run a little bit long. Max, I think that there's a lot more you can show people. Some practices are gonna love this. Some practices are gonna want to test this. We're gonna show a slide. Can you jump into your slide where all the coupon codes are and the links and stuff like that? Either way, I'm putting a polling question up asking people if they want to just set up some time with you directly. So you can just kind of take a look at their practice, take a look at their engagement letter, take a look at their sales process and see how you can help. Max is extremely cool guy to work with. He'll work with you and try to see if Practice Ignition is a good fit. So just let us know if you want to set up some time with Max. Send him your email and he'll reach out to you and he'll set up an appointment with you and just kind of do a one-on-one. If you have multiple people in your firm, I'll probably recommend having everybody involved because a conversation about engagement letters and the onboarding process involves everybody in the practice. So Max, we're going to give you a couple more minutes after the CPE to cover a couple more things. I just want to make sure that people that have to leave at 1 o'clock on the dot, because this is a 1-hour webinar, that they have a chance to put the CPE keyword in there, okay? Let me see what other questions are. Somebody's asking about the fee for, okay, so you use a merchant service to be able to take somebody's credit card, right? For sure. So what people are asking, what's the fee or who do you use for that?
Okay, so you actually don't need to have your own merchant account. You just need a bank account. You just give us the bank account that you want the money to be deposited into. And the fees for that, it's a $1 flat fee on ACH, and it's 2.9% on credit cards.
Okay, so it's 2.9% on credit cards, no matter if it's Amex or whatever. It's just
it's just MasterCard, Visa, and Discover right now.
You don't have Amex yet, okay.
Don't have Amex yet. Working on Amex right now.
Oh, okay, perfect. So I'm going to go ahead and put the CPE keyword up as well. So let's get that done. So put the CPE keyword, and right after the CPE keyword, we'll talk about the link to set up a free trial, and you have a coupon code for a discount as well. So I appreciate that too. Let me see what other questions I have here. Michelle, do you have any questions? Let me see.
There were a few questions there, but you answered them already, I think, for a lot of them. We are going to go a little bit longer because somebody said they'd like to see a full hour on Practice Ignition. So those of you that can stay longer, I think that's a great idea. Those of you that do need to jump off, you can always watch the recording to see the demo later. You will get a link to the recording of this webinar in a follow-up email along with the link to the slides, as well as some contact information and things like that.
Also, for everyone that wants more of a demo, there is a lot more to go in. So I've only gotten through a small portion of the app. There's a lot more that it's going to do for you. But in that email, there's a link to book a time directly into my calendar to get a full demo if you want to do that. And then also links for the webinars that we run weekly, so you can learn more that way as well.
Okay, perfect. All right. So guys, if you're kind of listening to the webinar and not staring at the screen, this is the last opportunity to put your CPE keyword. So I'm going to go ahead and close the poll. So this is the last opportunity, going once, going twice, done. Okay, so can you show your screen again and show us that screen with the link? And I'm also going to email. So one thing, my email is blowing up right now with people asking me to send them a copy of my engagement letter. Okay, I understand. I worked myself into that one. Go ahead and share your screen, Max, because we're not seeing the links to your website. No,
you need
I don't.
You need to close the poll question, Hector. You need to...
it's closed. It's probably not.
Oh,
not
okay.
possible. Okay, how about now?
Also, perhaps, Hector, you could put your engagement letter in the Google Drive or in Google Docs or OneDrive or whatever and share that in the follow-up email.
That's exactly what I'm going to do. So everybody's going to get an email with a couple of things. They're going to get a copy of the slides that contains all the links that we shown, all the different resources for engagement letters, and the slide contains a couple more things that we didn't cover. It's going to contain Max's contact information, so if you want to do a demo for Practice Ignition, and Max, for some reason, your screen's not showing, so let me show it on my side. That way we can have the coupon code and everything in there. So let me have that in there. Max, what are the things that you feel that you didn't get to cover that is important to at least mention?
Okay, a couple of quick things, and again, feel free to contact me, come to any of these webinars that we run to learn about that. So it's going to do a couple of different things we didn't get to. One that's really important that I think is huge is scope management. Like you were talking about, Hector, updating your agreement if you're on fixed pricing, making sure it's up to date with your client. That process is really easy in Practice Ignition. You can edit any of your agreements, ask for client approval on your edits, and then it automatically updates your other systems. So your future invoices are automatically corrected, future payments are automatically corrected, so you just have to do that one click and away you go. The other element that is really important that we didn't touch on is reporting. So there's all sorts of reports you can run in Practice Ignition about how you're doing on a particular service, how many bronze packages have we sold. If you know that there's a good follow-up point, like you do a data file cleanup, and then like 3 months later, usually you can offer ongoing services. You can search services by time frame, figure out where your upsell opportunities are. And then the last one that's really cool that we didn't have a chance to get to, and it's unfortunate the screen share isn't working, is a website plugin. So if you do offer fixed price packages on your website, that bronze, silver, gold kind of model, we can hook that directly into your Practice Ignition account. So your client can request services from your website. It'll feed right into Practice Ignition, and you can get an engagement letter added to them.
Okay, so everybody, you should go to practiceignition.com, set up a free trial, try it, right? I think, is it 14 days or 30 days? I forget what the free trial period is.
14 days.
It's 14 days. Give it a shot. Try it, right? Try it with one client, see how it works. You don't have to use the payment feature. You don't have to get paid through it. Just kind of get a feel for what it's like to do engagements through a system instead of through regular word printing and paper process. Book a one-on-one with Max so he can walk you through it. He's giving us 20% off for the first year if you use the coupon code QB Power Hour. Even if you forget to use the coupon code, if you contact him, he'll set you up with that. That's not an issue at all. Max, I think that anything that you missed, let me know and I'll put it on the email for everybody because obviously, the demo should be complete, but at the same time, it should just be enough to spark people's interest. So Max, any last words?
No, that covered it off really well. Definitely just do what Hector said, come give it a shot, and if you have any questions, definitely contact me. I'd be happy to help you out with them.
Perfect, thank you. So for the people that are still on, thank you for going over a couple of minutes. Next week, we're going to do, normally we do it every other week, but next week, we're going to go in depth with QuickBooks Enterprise, and I'm actually going to walk you through the past 5 years worth of QuickBooks Enterprise improvements, and we're going to talk about the specific reasons why people go with QuickBooks Enterprise instead of Pro Premier or even QBO. QuickBooks Enterprise it's an extremely strong program, and in many times is very underutilized. So hopefully I can show you things that you didn't know about QuickBooks Enterprise. Then the week after, we're going to talk about managing accounts payable in QuickBooks, and we're also working with a couple of vendors to see if we can bring Bill.com and HubDoc to see how they deal with the accounts payable process as well. Then on the 12th of November, we're going to talk about report consolidation. So we're going to talk about consolidating multiple financial statements, dealing with intercompany transactions, and managing multiple companies. And we're also trying to get QVinci in here to do a demo of the report consolidation. Then the week after, on November 19th, it's going to be an hour later, so it'll be 1 p.m. to 2 p.m. Eastern or 10 a.m. Pacific to 11 a.m. Pacific. And we're going to do live from Las Vegas. Michelle and I are still discussing the topic. We think we're going to talk about bank feeds and value pricing and the combination of the two. On December 10th, we still don't have a topic. We're working on it. And on December 17th, which will be our last episode of the year, we're going to be doing the top 10 QuickBooks apps of 2015, but that should have said 2015 in there. Sorry for the typo. So we're going to talk about that. We're going to recognize the top 10 apps, and we're probably going to do 2 or 3 demos, and that's it. So watch out for my email. I'm going to send you all the resources that we talked about today in the email. Subscribe to Michelle's LinkedIn group. There's 150,000 people there, tons of support. Subscribe to our QB Power Hour Facebook group where we can continue the conversation. Thank you very much for attending, and you guys have a wonderful day and weekend. Michelle, any last words?
Nope. Thanks, everybody. I know a lot of people said they are interested in practice ignition, and I encourage you to check it out because it is a really valuable tool and a great resource to help you with your practice and your engagement letters and things. So thanks, everybody, for joining us. Glad to have you all here.
Thank you, and thank you, Max, for being a panelist and showing the demo of your product. Have a wonderful day.
Thank you for having me.